for example, through APIs. And here we just see the beginning of this development.
Hello, and welcome to the third video in a four-part masterclass series on recent developments in correspondent banking, brought to you by The Banker magazine. My name is Joy Macknight, and I'm Transaction Banking and Technology Editor at The Banker. And joining the discussion is Christian Westerhaus, Global Co-Head of Products and Solutions at Deutsche Bank. Thanks so much for joining us. And Wim Raymaekers, Global Head of Banking Market at Swift. Thanks for joining, Wim. Following on from our discussions on the current landscape in correspondent banking and some of the disruptive forces coming to play, in this part we're going to dive into the role that technology is playing in transforming correspondent banking. So the first question that I have is really around the amount of innovations that's happening within the payments industry, but then that's also having a knock-on effect in terms of correspondent banking. What new technology is coming to play that you think is sort of making the biggest change?
Obviously, there is a lot of talk about distributed ledgers, blockchain technology, also instant and real time. Correspondent banking is part of cash management solutions, and cash management per se is an IT-driven business. The straight-through processing rates are well above 90% with most of the players. That means you've got to have the right technology in place. It also means that legacy monoliths can or should be broken down into the right components in order to interface with new technology providers, for example, through APIs. And here we just see the beginning of this development. Where it comes to instant or real time, we should bear in mind that the settlement within correspondent banking can be very fast actually already today, meaning within a minute or even below a minute you could settle transactions.
Okay, and Wim, like obviously Swift has actually been really heavily involved in a lot of conversations around the move to real-time payments. Can you tell us a little bit about how you see this coming to play in the correspondent banking world?
Yes, we see that indeed emerging on a domestic level. Where entire countries like the UK, Sweden, Singapore, and now indeed Swift is involved in providing the infrastructure for Australia that's going real time. The US, Canada, and in Europe, we see all of these countries move towards real time. And then I think there's the expectation also by you and me, having that experience in paying real time, to take that experience cross-border. And that's then I think where correspondent banking will come in terms of supporting that cross-border transaction with real-time payments. I think that's definitely a trend going forward.
But obviously that's the biggest challenge as well, isn't it? It's one thing where you have a lot of domestic payments, but actually that move to cross-border is what really, I think, is what is making all the, you know, especially in Europe, making it the most challenging conversation.
Absolutely. It's that you don't stay necessarily within your country, right? You also have cross-border payments. So we need to look at how does that domestic system that is truly innovating, how does that then take those transactions cross-border? Or how do we achieve interoperability between two domestic systems? And that harmonization and interoperability, I think that will be a key going forward. I think for the moment they're so focused on taking the country real time, and that's already quite a community initiative to take all the players, all the banks involved to go real time. And I think the next challenge could be to provide interoperability cross-border between those domestic systems.
Okay. And in terms of your experience, Christian, do you see that corporates are really demanding this instant payments or real-time payments? Are they looking for that?
To be honest, at the moment we haven't come across requirements from corporates that ask for real-time or instant payments 24/7, 365 days a year within a number of seconds. We have not come across that demand, yet when we now develop the future payment architecture, the market infrastructures, here I speak about the network effect, we should plan for the digitalized economy going forward. Whatever we develop has to serve the use cases not only of today, but in 10 years from now, because those market infrastructures tend to stay for longer periods once they have been developed. And we all want to see that we have successful developments and that we don't plan only for a few transactions here. I believe that with correspondent banking, if we do it well from a clearing settlement perspective and expand our thinking more to the end-to-end, we have a strong basis to support in particular the international trade and business.
And it's not all about technology. Like Christian mentioned, what corporates are looking for is predictability and transparency and tracking of payments. So what we probably need to do is to see on that existing infrastructure, how can we overlay that with business rules and business services, overlay services that speak to the corporate treasurer. And that's what will bring the enriched customer experience. So you need a bit of both. You need technology and you need business rules that together provide that magic combination.
In a compliant framework, which also adds to it, which goes back then to central bank reports, to overseers, and to international regulations in the AML space.
Totally.
So Christian mentioned at the very start about blockchain, which is another big buzzword, distributed ledger technology. Wim, do you think this has like a real role to play in terms of having a decentralized payment system?
Absolutely. I think we're all exploring those technologies. I think they provide opportunities but also challenges. Like Christian just mentioned, compliance and risk. So yes, they provide opportunities, but we must also see how they are applied in today's environment, because banks still need to meet the compliance, liquidity, credit risk requirements. So we need to see how those technologies can be applied in that environment. And it's not because, again, coming back to those business rules, it's not because you have a real-time capability to send payments that the receiving bank will actually be able to credit the beneficiary in seconds. That may still take 1, 2, or 3 days. It's not because I send that payment to you for free that the other bank will not deduct any charges anymore. So technology can really provide an uplift, but it must, I think, be accompanied by business rules and agreements between banks in order to benefit from that enhancement in the technology platform.
Okay. Well, that's great. Thank you very much for that contribution. The final video in the masterclass series will be really looking at the future of correspondent banking.